If your portfolio's income feels more like a trickle than a stream, you're not alone. Yields are under pressure, interest rates are shifting, and the set it and forget it approach isn't exactly paying the bills anymore. I'm Tara McBride, Chief Marketing Officer at Prime Capital Financial, and today we're exploring how investors can squeeze more juice out of their assets without squeezing their risk tolerance dry. Joining me, as always, are two guys who can talk income strategy without putting you to sleep: Portfolio Manager Clayton Allison and Deputy Chief Investment Officer Will McGuff. We've also put together a free resource to help you rethink your approach to generating income in today's market. You can download it by scanning the QR code on your screen or using the link below this video. Let's get into it, Will. We've seen a big shift in the interest rate environment over the past few years. How has that changed the landscape for investors seeking yield?
Yeah, Tara, you just nailed it that we saw a big shift in the yield environment. For 10 or 15 years post global financial crisis, we had what was called ZIRP, zero interest rate policy. So you had to really stretch and take risks to go get yield by going out the curve. Now that rates have normalized with the economic backdrop, it's way easier to build a diversified, durable income stream without taking that risk. And there's also more tools in the toolkit now with product evolution. There's newer ETF structures designed to replicate option strategies, target payouts. Structured notes have barriers. You have MLPs, REITs, other equity income classes that can now be layered thoughtfully. So with that, I'd say the backdrop has changed dramatically.
Yeah, it sounds like there's just a lot more diversity out there. So, Clayton, where do you see the most compelling income opportunities right now across asset classes?
Yeah, I think, like you mentioned, Tara, there's a whole new environment in play here. And to Will's point, you have an endless stream of options to really pick from at this point. I want to hit on one in particular that you mentioned. It's really options income that seems really compelling nowadays, because now that might be out of some people's, comfort level, and we'll get into that more later. But as we've seen currently year to date, volatility is kind of all over the place. Anytime a new headline comes out, volatility spikes. Well, that's where you can really glean a lot of income off of that option premium, because as volatility spikes, those premiums and that option income becomes that much more valuable. As Will mentioned, there are these new option ETFs. They've been around for a couple of years, but if you're not comfortable trading options yourselves and selling those contracts, those types of ETF structures might really be enticing for a lot of investors, because sometimes you'll see yields up to 10, 12% on an annualized basis.
So it starts to sound a little complicated for what I like to call Jane investor on the street, a person like me, right? So, Will, for an investor nearing retirement, what are some practical strategies to generate income without taking on unnecessary risk?
Right. So Clayton and I are just the investment pros. We're not the financial planning pros. So this is where your financial advisor comes into play. They know your risk tolerance, your goals and objectives with regards to how you need income in the future. What we do work with our financial advisors a good bit, and I always like to think of it in more of a bucketed approach. So you still want to use fixed income that's less risky, like treasuries and municipals, depending upon taxable or non-taxable money, to cover most of your expenses, kind of like your sleep well bucket. And then, as you hit on your intro, risk is huge with these other income strategies that we're talking about. And so again, working with your advisor, you can layer in these strategies to enhance yield with regards to whatever your risk tolerance is. Option income is a great idea. Everything has its downside with regards to there's no free lunch in investing, and that holds true for income strategies. So you really want to balance reliable income with the flexibility, so that as these rates environments move, and we've touched on where rates may go in the future, you're going to avoid concentrating in any one single income source that could hurt your future income needs of your portfolio.
Am I hearing diversity in what you're saying there?
It's a key.
um, yeah, Clayton, if someone's portfolio isn't producing income today, what are the first adjustments you'd consider?
Well, I think it goes right back to Will's point, and now we're going to sound like a broken record. It's all about your risk tolerance and where you are kind of in your plan. Like my objectives, like as a younger professional, if I'm aggressively seeking risk, might be very different from your question earlier, Tara, of if I'm getting ready for retirement. So if my income or my portfolio right now is not producing the income that I'm looking for, I might lean more in towards the option income streams and maybe high yield bonds and more equity income drivers that have a little bit more volatility because I have a longer time frame to work with. Now, if I'm closer to retirement, like Will already mentioned, you want to be diversified. You might want more treasuries, fixed income, lower volatility things that are going to still give you that yield generation that you're looking for to replace that income, but aren't going to increase your risk that detrimentally. So I guess to your point and to your question, Tara, it kind of depends. It's a case-by-case basis. That's why it really is important for you to talk to your advisor or the person that you trust to figure out that plan for you to accomplish your goals. And I can't just give some blanket statement of, go do cash secured puts. I don't think people are going to respond very well to that.
Yeah, I mean, nobody really loves to hear the "it depends" answer, but it truly does depend on your unique situation, your age, your goals, what your retirement is supposed to look like, and talking to somebody, talking to a professional who understands these things and the nuances that are involved, as well as who understand your situation, is really the best way to get a plan in place. So income isn't dead, but the way you get it might need a serious refresh. From bonds to alternatives to strategies you might not have considered, the opportunities are out there if you know where to look, or, as we have hit on here today and in many of our videos, who you talk to. So if you want to go deeper, grab our free guide that breaks down these concepts with some examples you can actually use. It's yours, no strings attached. Just click the link below or scan the QR code on your screen and start making your portfolio work harder for you. Thanks for tuning in. Remember to stay informed, stay invested, and as always, we'll be here to help you navigate the twists and turns of the market.